always enjoy him getting us up to speed. If you want to join the conversation today, 504 2600995. Reach out to us through the Winning at Life app, text, email, or call the show through the Winning at Life app. You can you can watch the show over on Facebook Live and our YouTube channel. Check us out at the Winning at Life Facebook page. My personal page is Gregory Ricks. So check us out there. What I ask you to do, if you love us, if you like us, we bring value, share it. There's, if you're used to Facebook, you could kind of share that to your friends and spread the word about the work that we do here. Welcome to Winning at Life. Dwayne, how are you today?
I'm good to go, Gregory. Oddly enough, busy right now. Which is a good thing. Definitely not complaining. We're seeing some challenges here and there. Nobody knows that more than you do. You keep up with this stuff, and but what we're actually starting to see. I mean, last time I was on the show with you, uh, the 30-year conventional was at 6.90. Today, we're a little bit north of 7. And, one of the things I know you talk about on your show, and especially when we've talked about this entire year, rates are going to recede, but it's not going to be a free fall, right, Gregory? It's not going to be falling off a skyscraper. It's going to be kind of the ladybug ride over in Audubon Park. It's little ups and downs, little ebbs and flows. And right now we're kind of maybe we're at the top. We're not at that little ebb and flow when it's going down. We're at the crest of the wave right now. So that's why we've seen rates peak up a little bit based on data, which is something we can obviously get into as well as we move forward.
Well, from a standpoint, the market's kind of happy.
Yeah.
Must be because they don't think interest rates are going down right now, which would impact them. So, from that standpoint, we're here at this moving interest rate environment for a while.
Yeah.
I would not anticipate it moving down till later this year, subject to problems with the economy like a recession
Right.
would cause the Fed to change that direction, but just the data's not sending us there
It's
as of yet.
it's not, Gregory. And what's crazy is in December where we got a little bit of that relaxation and a little bit of a break and it caused a good stir. The data wasn't there either. But they came out and said cuts, and then somebody ran with 7 or 8 cuts in a year. And I know you and I were like, I mean, heaven forbid we follow data, right, Gregory? We don't just, you didn't get to be where you're at, and my goal is to get where you're at as far as that goes. And we like to make sure we share with our audience facts and data. And it wasn't saying that back in December, and now it's just confusing, Gregory. And like you said, if you look at the numbers, hey, this week jobless claims were down. I don't know how, maybe, but when you got Nike and Google and all these gigantic companies laying people off, but less people file for unemployment this week. So you're just it's if we're going by data, and Gregory, you talk about it all the time. It's how do you feel, right? You can walk through the grocery store and go, hey, check out my 3% rate. They're probably not going to take that to buy bread and milk. It's going to take the money in your pocket. So to me, it's all about feeling. But if you look at data right now, it does not equal out to any rate cuts coming anytime soon, Gregory. And I know you stated that.
Yeah, so people have to date that rate.
Marry the
It
house,
may,
date the rate.
yeah,
Absolutely.
it may be a few years. And once again, we talked recently about this on the show. For us to get back into that world of, let's just say, to 3%
Oh,
Fed rate,
yeah.
it would take ugly economy and the Fed jumping in and doing everything they can to stop everything from halting. And that's what would take us. And the Fed will do that if necessary. They just don't want it to go that way.
Yeah. And look at Gregory, though. Look at what happened from December when we were at, in December, we were sitting at, going into the month of December, we were sitting at the 756 in the middle of November going into December, right? When that dropped down, all of a sudden we came on air and December, we were at December 30th, we were at 6.69. That 0.5%. I mean, it was like turning on a faucet. Everybody got excited. Everybody jumped in. And so it's not going to take much. And I think folks, at least I know your Winning at Life listeners and the Gumbo Nation listeners are understanding more and more the value of home ownership. And I think those are the things that are creating excitement. But people have to understand, and one of the things I'm telling my clients is we're staying the course. We're marrying the house. We're dating the rate. There's no loan that you're getting right now that you're saying, I am so excited. Thank you. I cannot wait to pay this for the next 30 years. Go give me some more of that 6.875 or seven, a little bit over 7. Nobody's saying I can't wait to pay that for 3 years. I mean, for 30 years.
You had a guest on your show this morning talking about insurance.
Yep.
And I have that coming to across my plate at times, wondering and people voicing problems on that. I do want to talk about anything you picked up
Absolutely.
from that, kind of like what's your main three thoughts on that in the next segment.
Yep.
But I'll share a thought right here in the last minute regarding mortgages and prices are high and they're coming off and sellers are wanting the top of the market.
Mhm.
But some cases, some people are just like, I want to buy a house and they're determined and they're not going to wait a year, 2 or 3. One of my thoughts are, and you've got to do an inspection. You've got to make sure the appraisal comes in the ballpark or you might have trouble getting financing. So one of the things I think is how long are you going to be in that home?
Yes.
If you're going to be there a decade, the appraisal is kind of all that matters. If you have to overpay some, then price doesn't matter. If you're going to be there a decade, what's your quick thought on that?
Absolutely. If you can afford it, right? Greg,
Yeah.
26% of sales, 26% of sales right now are going for above asking price. That's 1 out of 4, Gregory, are going
Wow.
above asking price.
All right, let's break. We have Dwayne Stein with us. Look, call this number 504-260-0995. You've got this guy that knows mortgages inside and out, the mortgage market, real estate, how to's. Reach out to us. You are listening to Winning at Life. We are Winning at Life. We're going to take a short break. Be right back.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
My mother just inherited a couple of annuities. If you could explain the difference between a government pension offset and the windfall elimination provision is.
You now make too much income to contribute to a Roth IRA.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
You all are so good.
Investment advisory services offered through AE Wealth Management, LLC.
Rates are falling. Rates are falling. Say it with me. Rates are falling. This is Dwayne Stein with MortgageGumbo.com. Lower mortgage interest rates mean new homeowners, you can now buy more home with less money, increasing your wealth. Current homeowners, let's pay off those pesky 20% credit cards and other debts that have piled up with a low refinance saving you hundreds, even thousands a month. Let's chat today to see if the time is right for you. Visit MortgageGumbo.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
If you do not have money set aside, you do not have retirement assets, you don't have significant savings, you're thinking, well, when should I turn on Social Security? I'll answer that for you right now. You should probably work as long as you possibly can and as much as you can, because that means you defer Social Security as long as you can up to age 70. And you can keep working past that. That's fine. But at age 70, you have to turn it on because you've maximized it there. And you've created the largest possible payment, and you're going to need all of that.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or GregoryRicks.com. Investment advisory services offered through AE Wealth Management, LLC.
Your stars need to be wished on. Your skin needs to be kissed on. My eyes, baby, they're fixed on you in your snapback. T-shirt, your favorite rock band. Checking your makeup and my Ray-Ban.
Welcome back. You're listening to Winning at Life with Gregory Ricks. We bring this show to you every Saturday from 10 to 1. So we've got Dwayne Stein, host of Mortgage Gumbo, of mortgagegumbo.com fame. So he's with us first hour. Second hour, we're going to talk about sounding board, of avoiding scams, talk about the market, other ideas, Social Security topics in hour 3 today. If you want to join the conversation, 504-260-0995 and go over to the Winning at Life Facebook page. You can stream the show live, watch it, and share it with your friends. Dwayne, any thoughts from the break?
I think, well, Gregory, one of the things I want to make sure, and you've been such an advocate of this, and you understand the value of home ownership. But I want to make sure that I'm clear for folks that are listening that are in that I'm going to wait category. And I get it, right? The one thing about me, I know I'm going to continue to do loans. I'm trusted. I've earned that over 30 years. And I also understand that person who's going, I'm not going to pay 7% or 6.5%, whatever that number is. But take into account, listeners, just the cost of waiting. And so take, for example, 2 weeks ago, a 30-year conventional rate, Gregory, was sitting at 6.92. Today, a 30-year conventional is at 7.08. So you go on a $250,000 loan, Greg, principal and interest only, it comes out to be $24. Let's just round up to $25. So you go, now, I don't want to pay $25 more than anything I have to either. However, let's say you buy the house today, you pay $25 more, Gregory. Over a 2-year period, you're paying $600. 25 times 24 is $600. But your home, if it's appreciated at 5%, you've picked up in just 1 year at least $12,000 in value. So that's the biggest thing. And I know that's what you talk about. And that's the thing, just the value of home ownership and the appreciation and where people are thinking it's going to go. Home ownership is still going to go up. And proof of that is, like I said, when we're ending, Gregory, to think 1 out of 4 homes is still going above asking price is amazing. That's up 8% pre-pandemic, which is 2019 and above. That's up 8% since 2019. So, I mean, that gives you an idea of, it comes down to one thing, Greg, it's supply and demand. And there just isn't inventory right now, Gregory. There's just not. And now reports come out, home builders. I don't understand this, Gregory. And, you know all about reports, and I read these things. I'm not just a beautiful, good looking, stocky, ball-headed guy, you know, an Adonis. I'm also kind of a numbers nerd. You know, I know you couldn't tell that by looking at me, but you know, when you're looking at some of these things here, Gregory, and you start seeing where this stuff is going, and people paying over the asking price, and looking at this, it just shows you. So you've got these builders who are saying builder confidence is at 8-month highs, yet they've stopped building. So what that's going to cause, Gregory, is your CPI reports that have 40% of it is housing, Gregory, 40%. How in the world are those numbers going to get better? Because you know this, you've built a house. You didn't just go, all right, I'm ready to build a house, and tomorrow you move in, right? So there's permits. So we know if building has slowed now and it's slowed down, we know that's going to affect things for the next 6 months, because you can't just deliver a house on a truck, so to speak, if that makes sense.
Well, we talked about recently, where are the starter homes?
Let me know if you find them. If you find them,
There's nobody building them.
drop a pin so we can all come there and hang out with you if you find out where they're at.
Yeah. So I just pulled up a calculator over here regarding housing price and,
Yep.
and inflation. I'd give you the website, but I can't quite figure out the website. With that said, they're using U.S. data. According to the U.S. Bureau of Labor and Statistics, prices for housing are 51.77% higher in 2024 versus 2010.
Yep.
That is crazy. Now, if we look at it on a yearly basis, they're showing housing experienced an average inflation rate of 3.03% per year. Well, we know that's been more significant in
Correct.
recent years.
Yes.
But what that tells you, if you're taking a long-term view, I kind of go back to that. And we have to preface this. You have to buy a house that looks good or you can fix it.
Yeah.
It has to be in the right area, but it also can be in areas that are transforming. Because I was driving through an area yesterday and I said, 30, 40 years ago, all these apartment buildings here look nice. And then 30, 40 years later, you're not sure you should be in that area.
Right.
But with that said, probably in another 20 years, all that gets transformed anew and changes the whole pricing. But that's what developers and investors do. But over time, single family housing, right area, make decent decisions. It's going to improve over time. Even if you're not saying, well, I don't like the neighborhood anymore. Well, you know what? The neighborhood's priced pretty high over years.
Yeah.
It's not like it's going down in value. So that's one way to think about it. If you've got this area and you brought up the cost of waiting, of delaying, can be expensive because those prices are still going up.
Yeah.
Insurance is going up.
Yeah.
Maybe interest rates will go down in the future. We do expect that at some point, but when? Don't know. But as far as what people also have to adjust to is get used to this rate environment. And a lot of people grew up and have seen, that 3% or less world for a decade or so, and it's just not there anymore. And if it comes back or when it does, you can take advantage of it. That's kind of your jam as well. Your thought?
Yeah, you 100% hit the ball out the ballpark. I mean, home ownership, unless you're an investor that's looking at fixing and flipping, I mean, home ownership is a wealth building tool, and you've got to approach it like that. I think right now you get a lot of folks, Gregory, who are, like you said, since 2010, guess what? The normal rate was in the fours, low fives. So that becomes the norm. Then you get it where 20 and 21, it becomes a giveaway program. Half of 22, you had mid fives, and then you start getting into this mid 6 to 7 range, and it becomes almost anarchy. But it's all about what is your comfort level, where are you at in the process, and how serious are you about home ownership. And because that home, if like Gregory said, if you're looking at it and you're looking at this as a wealth building tool, Gregory, chances are that home, I've never had a house not deliver for me. And what I mean by that is pay me back when I was ready to sell it at that time. And now more than ever, Gregory, if rates went down to 5.5, that seems to be the number. Everybody's like, I'm going to get back in the market at 5.5. I know you, and I know I'm not going to just give my house away so I can go get something at 5.5%. And I think folks just don't understand. That's the 2020 and 2021 changed the scope of home ownership forever. It's changed inventory forever. And that's going to be, like you said, looking in the mirror and going, hey, this is the world we've got to operate in. How do I succeed in this market?
So I gave that thought about if you're looking 10 years out, you're going to be fine. But let's change that to 5 years. $250,000 house bought in 2018 based on average inflation that we've experienced over the past 5 years of housing is 4.06% per year. That's a $250,000 house that would sell now for over $317,000. So it doesn't take you necessarily 10 years to get well,
right,
from that standpoint.
And Gregory, that would cost, on the example we're giving, if you didn't refinance for 5 years, you would pay $1,500 higher mortgage payment than what you would have paid a month ago right now. And then you're like, oh, nope, I'm not going to pay it. But you'd have picked up, how much was that? 60 grand? I mean, come on. I'll take that investment all day long. That's if you didn't refinance and save money and do all those things in the meantime.
Yeah, that's $67,456
Wow.
increase in 5 years. And that's kind of have that understanding. And I'd use that as a baseline because this isn't always going to stay at this level.
Right.
And just say we go back to more historical of the past 20 years, 10 years to just above 3%. If you make a good decision, take care of the property, keep it up, repair, all this stuff happens, you're going to be in good shape. You just understand you're borrowing somebody else's money to get in the game there from that standpoint. I've spent some money on my home that's 8 years old now. It's just kind of like, okay, we need to do some upgrading, freshen up,
Yeah.
make some repairs because the value's going up. I don't mind spending some money because I've done good
Yep.
the past decade in the home. Let's take a break and let's talk about the insurance
Yes, sir.
topic on the other side of the break. You are listening to Winning at Life with Gregory Ricks. We have Dwayne Stein with us. We're going to take a short break.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I'm your host, Gregory Ricks, a financial advisor here to answer your questions and help you win with your money.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know. Simple information from good people.
Investment advisory services offered through AE Wealth Management, LLC. Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
Will this be your Social Security, your 401k, pension, lump sum, your debt, student debt, credit cards?
You all are so good. I've listened to you for years. Sometimes I'll pull up to the side of the road and just listen.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. Investment advisory services offered through AE Wealth Management, LLC.
What does your ideal retirement look like? Is it traveling the world, fishing whenever you want, spending time with the grandkids, or maybe you don't know yet? Hi, I'm Gregory Ricks. Let us help you plan the retirement you deserve. Give us a call or go to gregoryricks.com to schedule a visit. We are Gregory Ricks and Associates, the Total Wealth Authority.
Firm provides insurance services, investment, and advisory services offered only by duly registered individuals through AE Wealth Management, LLC. AE Wealth Management, LLC. Gregory Ricks and Associates are not affiliated companies.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Cancer Crusaders has been raising funds for cancer research in New Orleans since 1976. Cancer Crusaders Inc. is a nonprofit, all-volunteer organization with no administrative overhead. Cancer Crusaders has raised over $4 million so far, and all of that money goes to the Louisiana State University Health Sciences Center Foundation and the Tulane Cancer Center in New Orleans, where they are literally working on a cure for cancer. Get involved, donate, volunteer, or attend a fundraiser. CancerCrusadersLA.com.
Fox News, I'm Pam Puso. South Carolina voters are making a choice between Republican presidential hopeful Nikki Haley and former President Trump.
We have a real problem. Our country has never been this way. It's never been so dangerous or so sick. When you look at millions and millions of people pouring in through our border, coming in at levels like nobody's ever seen before.
Mr. Trump is heavily favored to win today's primary. Haley says she is looking beyond South Carolina. Federal sources tell Fox News the man accused of killing a nursing student at the University of Georgia is a Venezuelan national here illegally.
26-year-old Jose Antonio Ibarra was taken into custody on Friday on multiple charges, including felony murder, kidnapping, and aggravated assault.
That's Fox's Ashley Strohmeyer. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you have a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
If you got a kiss on your lips, but you're looking for somebody to take. If you got a heart that ain't afraid.
Welcome back. Listening to Winning at Life with Gregory Ricks. We've been doing this radio show, I guess in a few months it'll be about 14 years.
Wow.
Crazy. Think about that. I remember that first show. That was a difficult first show. I thought it was a 1-hour show, a little earlier in the morning. And I was like, this thing's never going to end. I gotta talk for an hour. Now you know me, I can go 3 hours, I can go more.
Yeah.
At this time. And then you joined us just a few years later as a contributor to the show, and then you started your own show. So proud of you, Dwayne.
Appreciate you,
Greg.
Greg.
You do for the marketplace and people with that information.
Yes, sir.
There, and that's where I'm going to talk more in the next hour about the sounding board concept, but have a relationship with somebody like in your world of real estate, interest rates, mortgages. You know this stuff, and
right.
It's where somebody has an idea or thoughts, you can help them through that and correct some things where they may be thinking wrong about it.
Yeah.
We'll do it gently, but so there was something I did at an event. A fellow asked a question, and I said, well, I'm going to try to answer that gently.
I like that. I'm going to start using that.
So,
yeah. I'm going to be gentle here. I like that.
So one of the problems people have, okay, if they can get over pricing, say, okay, I want the property. Okay, I can live with 7% knowing it's not permanent.
Right.
What to make them feel better is if it goes to 8 or 9, huh?
Yeah, exactly.
I got such a deal.
Yeah.
But they're looking at, and we'd like to see them get some relief from that and refinance it lower in time. But one of the things I'm going to talk about in next hour here is some investors are optimistic because the current rally appears to be driven by strong earnings reports rather than expectation for interest rate cuts. I think it's some of both.
Yeah.
The hope that Federal Reserve might begin slashing interest rates as early as March helped drive stocks higher last fall, but central bank officials have recently cautioned that cutting rates too soon might allow inflation to grow entrenched, and market expectations for cuts have been pushed back. And if you look at the Fed's notes from their recent meeting, basically they've all but taken it off the table. No need to rush message was reinforced again this week, both with the release of the minutes from the Fed's
Yep.
last meeting.
Yep.
And I had mentioned that a couple weeks ago. I said, you're going to get an understanding when they release the minutes of
Yes.
the meeting,
Yes.
what they're thinking. They give the message, the podium meeting afterwards. Hey, here's what we talk about. Here's what we're looking at doing, and then you get into the discussions. That kind of gives you a strong. So I think that impacted the market as well.
Sure
But
did.
I don't want to stay on that because I think it's important to get into this insurance talk.
Yes.
And you had a guest. So share with my audience some
Yeah.
of your insights from that discussion this morning.
Yeah, like you said, Gregory, what you do is as you go through and to be in your world and in your lane, you surround yourself with experts in that industry. And Colette with Team Beat is amazing, and she's part of what I have, my Total Home Authority. And insurance right now, it's a big deal. There's a lot of times that people, hey, they're excited, like you said, I'll take the 7% rate, and it's a $250,000 house, Gregory, and they go get an insurance quote, and it's $5,000. Oh, that's a game changer for not some folks, pretty much everybody, right? Because then you go, well, heck, if I'm gonna pay, another $300 a month or $350 a month, heck, I'll go buy a $50,000 or $100,000 bigger home. So insurance is a huge thing right now, and what I want listeners and what Colette covered earlier on my show is the understanding of why we are where we are. There's underwriters that underwrite insurance. And at the end of the day, they dictate what the cost is. And that's all based on, Gregory, you've got your GPS, right? You've got your factors you put in on everything. And it's amazing. And the same thing with insurance. Where are the risk factors? Well, let's face it, South Louisiana in this listening area, we've got a couple risk factors. Not to mention we got hammered over the last couple of years with storms. So the reason you're seeing insurance where it's at is it's the folks that underwrite the insurance, Gregory. So when you hear people going, oh, more companies are going to come in, that's going to help with competition. No, it's not, because they've got to operate at a minimum to get into the state. So nobody's walking in going, I cannot wait to get into Louisiana so I can go break even, which is why you see the premiums where they are. And one of the things that I've seen, and I'm excited to share with your audience, and she mentioned, is what we are starting to see is the carriers that are here. Look, the strong survived. The folks that are here, the strong survived. But what you are starting to see that I think is exciting is you're starting to see a little bit of relaxation, Gregory, on certain things like roofs. Like a lot of these carriers, Gregory, they wouldn't write you if you didn't have a 2-year if your roof was less than 2 years old. Well, if not, the premium was double, triple. Well, they're starting to relax that. Now it's 5 years, some of them even a little bit more. So that is what she was explaining, and what I want to share with your audience, where you're going to see some benefits, right? Where you're going to be able to see some opportunities to see maybe some relief down the road with insurance. But it's not because the insurance companies don't want to offer it. It's what they're being told they have to cover, what they have to charge for their premium so they can stay in business. And that's been a big change because everybody that did go out of business. But it's a huge factor, Gregory. I would say probably half of my deals, maybe even a little bit more, that I deal with that get turned down or the people walk away, it's not because of rates. It's because of the reality of when they get insurance. And that's why when you go and look at houses, it's probably as important before you make an offer to get an idea of what that quote is before you move forward.
I can't think of there's a survey or analysis that can be done that insurance companies like, and it will reduce your premiums if you have this audit done on it. But I'll tell you what it has to do with is creating barriers that protects that wood surface and having a better quality roof put on the
Yeah.
house. And I'll tell you, when we built this house that I live in, people are kind of amazed when they see the roof. Well, did you have problem during Ida? No, we didn't.
Yeah.
But I'll tell you, they didn't give the roof away.
No.
It was a premium. It's a hardy, heavy material, and I think it's some of what you've got to look at is especially if you're replacing the roof, knowing it's going to get damaged again in the future. A hurricane's going to come back again.
Yeah.
Promise you. That's a
Or
certain.
like we had a
How
couple
can
weeks
we
ago, Greg,
survive that?
hail, right?
Yeah.
Hailstorms. So, and what you're talking about is like fortified roofs. So now if you get a fortified roof, it helps with insurance premium. Yeah, we've got hailstorms. We had a couple weeks ago. Who think hail? Those are the things that you're going to have to replace roofs. I mean, that's a big deal.
Okay, so when you kind of gave us the fundamentals on
Yep.
what's going on insurance, and they do have to make money, and if they see they don't come here to lose money. Oh yeah, we like losing money. They're not going to stay. They've got to pay the bills and turn a profit, and we know storms are coming, so it's kind of in this environment, yeah, we're going to have to pay more.
But let
We
me
can
give you,
move elsewhere.
yeah, I
Go
mean,
ahead.
yeah, but let me give you a couple wins too. Some things that there's what's now called a split policy, winning at Life Nation. And this is something I made sure that Colette covered on my show. And a lot back in the day, Gregory, we called the insurance person. They gave us what the quote was. Boom, it's $3,200. Great. Now what's happening is you have what's called a split policy. So you may have your contents, your peril with a certain company, but wind and hail with someone else. Everything's not in one, because instead of paying one company $3,200, maybe by having a split policy, it's $2,400. So make sure that you are asking, and when you're getting these quotes, when you're looking at purchasing a home, or even if you just want to call them and say, hey, can you reshop my rate? Ask them about a split policy. And because what that's doing is that's a way to win, Gregory, right? We got to figure it out, and it's not, we're just going to sit here and go, oh, boo-hoo, things are tough. I'm going to remove obstacles. I'm going to break through a wall. I'm going to do whatever we got to do. So, well, insurance companies are seeing that as well. So that's something that I want you to add to your vocabulary when thinking about buying a home or refinancing or just updating your insurance. And that is called a split policy. You could save yourself hundreds, even thousands of dollars a year by doing that.
Wow, pretty cool. Well, let's take a short break here. We're going to be back in 4 minutes with Dwayne on a few more tips. Insurance. You're listening to Winning at Life with Gregory Ricks.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
Most of what I hear when families come in and they're moving from one of the big banks that has a big brokerage firm, and what they feel is they're more like a number there, and that they're not getting that personal service or that communication. And that's one of the things that's really important to me, is that we provide that communication, we provide that service. But I'll tell you what, we're bigger than the average firm as that goes. And when you talk about who you're working with, the advisor, well, do they have a 12-person support staff? Do they have advisors working for them as well to make sure all of this happens?
Gregory Ricks and Associates. Find us at gregoryricks.com or call 504-832-9200. Investment advisory services offered through AE Wealth Management, LLC.
Mosquitoes. We know them as flying, blood-sucking pests. But did you know that mosquitoes are actually highly intelligent? They can smell human breath, our sweat helps them choose their next meal, and they use our body heat to find just the right place to bite. Outsmart mosquitoes with help from Mosquito Joe. Mosquito Joe has this time-release capsule that they spray that slowly releases its mosquito death over a course of a month. New Orleans.mosquitojoe.com. New Orleans.mosquitojoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
Would this be your Social Security, your 401k, pension, lump sum, your debt, student debt, credit cards?
You all are so good. I've listened to you for years. Sometimes I'll pull over to the side of the road and just listen.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. Investment advisory services offered through AE Wealth Management, LLC.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money, that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money, or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or GregoryRicks.com. Investment advisory services offered through AE Wealth Management, LLC.
Yeah, that's my girl in the passenger seat. Windows down, dancing around, causing a scene. That's my girl sipping Crown
Welcome
Sprite.
back. You're listening to Winning at Life. Financial News Talk Radio. Quick shout out to some of our show sponsors: Dwayne Stein, MortgageGumbo.com, Jude Heath of J. Heath and Company, CPAs, Wesley Blanchard Law, New Orleans.Mosquito Joe, Spitali's Deli. Hey, I'm going to talk in next hour. I'm going to talk to you about their crawfish Monica. They're ridiculously good. Gregory Ricks and Associates, the Total Wealth Authority, and Bistro Byron's in Mandeville. If I miss somebody, we'll circle back and talk about the sponsors a little bit more next hour. But we've got Dwayne Stein, show sponsor and show contributor for years, and he always brings it. And you know, one of the things I was thinking about on the break, and I think you're thinking about this too, is regarding escrows and the impact of insurance changes. You know, and we changed insurances, I guess, a year or so ago, but that also had impacted escrow and made my payment go up.
Yes.
And then the other day, I got a check in the mail that, okay, and the payment went down, and they kicked me back some money. So sometimes to get this right, you go through a little bit of pain to get there. It's tough. What are your thoughts on escrow?
Gregory, thank you for bringing that up, because a lot of times I'm taking strap metal. You know, I'm getting calls during the week and probably more now than ever, because, you know, people like, you told me I was on a fixed rate, my payment went up. Look, when it comes to escrows, number one, what are escrows? So whenever you buy a home, if you have less than 20%, if your loan to value is over 80%, so if you buy a $100,000 house and you owe 90,000, you finance 90,000, you're going to be required to have escrows. What are escrows? Escrows are your homeowner's insurance and your taxes. Okay. And then if you have flood, your flood as well, if you're in a flood zone that the lender requires you to escrow it. So when you're looking at this, what happens is, if you don't have escrows, you don't feel the pain that somebody that does escrow, because guess what? When your annual renewal comes up, the insurance company calls you and says, hey, Dwayne, your insurance went from $1,500 to $1,900. You pay that difference. You go, okay, or you go, let's look at it. What can we do to make it cheaper? When you're escrowing, the mortgage company, when they're getting the escrow, the insurance sends it to them and says, here's what the new insurance is at your renewal, right? So this is when it's renewing, okay? So your first payment's due April 1st. You get something that, hey, now your insurance is renewing. Well, all of a sudden at that renewal, let's say your insurance went up $600. Well, they send that into the mortgage company. Well, the mortgage company has only collected for the amount that it was prior. So the mortgage company is not going to sit there and go, hey, I'm going to be a nice guy and I'm going to pay the difference for you. So what happens is they simply take that and they increase your payment. Now, you'll then call me and then I'll get you with the servicer, and then what they'll do is what's called an escrow analysis. And they'll go, okay, hey, what happened here? Why did it go up? And then you have the option of bringing that money in, which if you can, great. Not everybody can, right? What I do is I'll say, use this as a time to contact your insurance company and ask them if there's some relief, if there's anything. Maybe you got a new roof. Maybe there's something that happened. Maybe you got one of those fortified roofs like Gregory's talking about, and the insurance company hasn't been made aware of it. So when they get that escrow analysis done, then you could look at having your payment reduced or maybe getting even a check back at that point. But the mortgage company, and I get you get upset, and there's nothing wrong with that. And I tell people, call, vent to me, that's fine. But then after, you're done kicking me, let's kind of figure out how we need to make this right. So escrows, and for years, this was never an issue, Gregory and listeners, because why? We didn't have the volatility in our insurance market. Your payment was what it was. The insurance every year renewed, no big deal. Now with the volatility, when companies are going out of business, right? And your insurance company is having to change you because the insurance company says, ABC is going out of business on April 30th. By May 1st, you better be with a new company. Well, now it takes you off of what your annual was when your mortgage was done, and it changes things up. So that's why escrows, that's why all these things, Gregory and listeners, is just so out of whack right now. But it does not mean, for me, it doesn't, because I do fixed rates. It doesn't mean that your lender misled you and said, hey, you've got a fixed rate, and you really didn't. So that's the first thing that we need to look at and go from there. And then guess what's going to happen too? You got tax years that come up. So that's going to change because the last tax roll was done in 2020. So guess what? It's every 4 years. So all these home values, it's exciting. It's great your value's going up, but chances are your property taxes are going to increase a little bit as well. So that will have an effect on your escrows also. So those are things there, Gregory, that I think it's important for folks to understand, and get with your mortgage holder, ask them about it, ask how this came about, then get with your get with your insurance agent and try to work through, hey, how do we get this reduced? What can we do here? See if they could shop you, get you with someone else, reduce that premium. Then they let the mortgage company know, and then you work through things and go from there.
Okay, you brought up something there I want to ask a question about. So you're looking at buying a house. They give information on what their utilities cost, taxes, and so forth.
Yep.
But you're going to pay $67,000 more for this house that this was worth $250,000 5 years ago, based on inflation.
Yep.
So they're going to reset those taxes because this is a new property transaction. They're not going to wait for the 4-year cycle, are they?
Well, what happens is when they do, when they buy, that's correct. You've got escrow. The taxes you're paying it based on where it was at the time that you bought it, okay, on what your taxes are, okay? So, if you're buying a house that, if Dwayne owned a house at $250 and has been paying a tax at $250, but now you're buying it at a higher amount, you're going to pay it on that higher amount. Yes, that's correct.
Yeah, so the government, so to speak, is going to reset you on that.
But they do that every 4 years.
4-year cycle.
But that's on a 4-year cycle. That's not on an individual purchase, because then that would be crazy if they were doing that every year, right?
Well, if it sold every year.
Yeah. Oh yeah. No.
I was checking to see if
Yes.
they
Yeah.
set that because it's sold.
Yes. No. Correct. If it's sold, yes, you are 100% correct. Yes. Yes.
So
Yeah.
something to think about. And I look, one of my pet peeves is people don't think about their most expensive system in the house, and that's the HVAC system.
Oh, yeah.
That's equipment, and it's going to break, and it's probably going to cost you $10,000. Now, it's going to cost you $10,000 probably some point in future to replace it, but you can take care of it bits and pieces. And something you have to think about down the line, and especially if you've bought a house and it's already 8 years old, that, what's the lifespan of that? Here's the other big piece you have to think about in the environment we live in with hailstorms, hurricanes, stuff flying through there during a tropical storm, hanging on your roof over the years, is that roof is going to be replaced somewhere in the future. And insurance companies have reached a standpoint is, hey, we're not paying for all that roof anymore. So that is something you have to have an expectation of in the future as a homeowner. Your thought?
100% agree, Gregory. And then that's the other thing I want to make sure, because you just brought that up. So make sure when you are getting insurance, you're asking somebody about replacement costs versus actual cash value. And that's especially on your roof. You want replacement costs on your roof because actual cash value means if you put actual cash value on your homeowner's insurance on your roof, it's taken in depreciation. So that's why a lot of times your roof goes bad and you're having to come out of pocket. Whereas if you've got replacement costs, it replaces that roof, period. And you're not coming out of pocket except for what your deductible is. So big words there. And that's a great point you brought up, Gregory.
I want the listeners to understand the value that you bring and the discussions and sounding board. And we've just had an hour with you of wide-ranging discussions, and you're prepared at all times for any parts of this subject.
Yeah.
I'm just telling you, sometimes you go to these banks and some of these other firms and somebody's helping you. They are not that versed. They're just paid to push paperwork through, and they just don't have this knowledge. Even if you are wanting to use Fred at Tropicana Bank,
Yeah.
you probably should check out Dwayne and see the comparison, and he'll compete for you with you
Absolutely.
for those lower interest rates as well and keep you up to speed. Dwayne, how do they reach you?
MortgageGumbo.com. That's simple. Or go visit Gregory Ricks' site. He'll get you to me as well.
Appreciate you.
Appreciate you, my man.
Have a great weekend. We'll talk soon.
You got it, buddy.